Hey guys, it's me, Carmen Hope Thomas.
And Jason Thomas.
We're back yet again.
Yes, we are.
Basically because of you. Many of you have written us and called and texted and emailed and have just given us really positive feedback about these recordings that we do, all to help you. And so tonight, I think one of the things that is always comes up, I think with almost every call.
That's very true.
Student loans.
Yep.
Student loans. How do I pay off a student loan? Well, today you're going to learn really, I think you'll get a better understanding of how student loans work. And once you learn how they work, then you know how to pay them off. Does that make sense?
It does. It does. Let's be very clear. We shoot these videos, very short videos. The information that we are sharing with you, we offer in free courses. We have free classes for anyone that wants to learn and know how to go about paying off a 30-year mortgage an average of 8 to 12 years without having to refinance. The monthly payments still remain the same and with little to no adjustment to your monthly budget. As well, student loans, for example, that we're going to cover right now, we're going to give you a glimpse of exactly how your loans really work, student loans, because they are unlike mortgages. They are a bit more deceptive because you will not see a student loan amount grow and grow and debt grow as you do a mortgage. It is one of the worst debts to actually have. And we'll show you why here in just a moment.
So sit back, grab a pen and piece of paper, and also you can always rewind this and get more detail as to how this works. So let's show them what a student loan actually looks like when we pull back the veil.
Okay, so let's go through this. What we're going to do now, click here to show our screen. And what you see here, right here on the screen, is what we call student loan larceny, because really that's really what it is, what you're dealing with. So what we're looking at is student loan $9,500 debt. Now, this is an actual client who had many student loans. And for many of you that you know, you may be making one payment, but a portion of it is going to this debt, another portion is going to another debt. But we're just going to show put the spotlight on one debt here.
And that really shows just how deceptive it is, because they put them all together and they take your payment and they just kind of give them to a little bit to everybody, which makes them even harder
to pay off. Okay, so $9,500 student loan is 6%. The monthly payment that the student loan company admonishes them to pay is $50 a month. So the question really is, how many years do you think it's going to take to pay this off?
We're going to give you 2 seconds. What do you think? Think about it. How many years to pay off a $9,500 loan at 6%, $50 a month?
Some of you saying 10, some say 20. Let's look at this. 601 months.
Bananas.
It will take. What does that equate to? Over 50 years. It will take to pay this student loan off. Why? Because of this little bug right here. The interest paid.
Wow.
Over $20,000 of interest that you're paying on this loan to pay it off.
So the $20,000, that's the interest, plus the $9,500, which is the principal, comes up to over $30,000.
And that's because the interest, all interest is not calculated equally. The interest on a mortgage is calculated by the month-end balance, whereas the interest on a student loan is calculated daily. Okay, so that's why you start to see these amounts just mushroom into something magnificent that you really don't want to have. I mean, if your investments were doing this stuff, that would be one thing. But this is a student loan that we're talking about here.
It's their investment.
Okay? But we're going to show you how easy this is, because you look at 6%, you say, well, that's not that high. But when you add up the total amount that you're paying in interest, it's no longer a 6% loan, it's a 216% loan. Okay, so don't focus on the interest rate. We want to focus on the interest cost. So let's break this down real quick to see what's going on here.
And this is going to happen real quick, so pay attention.
Okay, so let's assume that we're making the very first payment on the student loan in January.
That's right.
Only $2.50 goes towards the principal of that payment.
Remember, it's a $50 payment. $2.50 goes towards the principal.
That's right.
And then the $47.50 goes towards the interest.
That's correct. So now the balance on this is 9497.50. So your statement comes and it shows you when you make the very next month's payment now. of the same $50, we only have a penny more going towards the principal and a penny less going towards the interest. So
wow,
we're not well on our way to paying this off
not even
by any
close.
means. So we can clearly see what the balance is. But here's what I want you to focus on as we just give you a quick glimpse into what's going on. And it's this, right down here. Skip some of this. And I want you to focus on this $30.84. Now, what we're looking at is the cumulative principal column, which really it highlights all the principal payments from line 1 through line 12. So you're making the $50 payments every month. What you get credit for is what's in the principal column. So in 12 months, you would have paid $30.84 towards the principal. Now, what if we prepay this to the bank? Prepay this to the institution that we hold our student loan with.
Okay, so real quick. So you make a monthly payment, a regular payment of $50. And before that month is over in January, for example, you give them $30.84 just because you have it.
Now, listen, in some cities, that's not even dinner for two.
No.
But it's not a lot of money.
Not a lot of money.
But I'm going to show you, even if you went out to dinner by yourself and you pay $30.84, I want to show you how expensive that meal really is. Because if that $30.84 was applied towards the principal, okay?
You would look
showing
at
all the interest you're canceling.
Interest. Yeah.
$569.16 of interest, really minus the $47.50 you would have paid in interest in the first month. So
right there, if you think about it, by prepaying the $30 after giving them $50, that's $80.84 in 1 month.
That's right.
You would basically eliminate $569.16, and you'll be a whole year quicker.
In a whole, we would have eliminated 12 months of payments in just 1 month. So when you make the very next month's payment, what line would you now be on? Line 13.
That's right. See how cute that was?
So here's what we want you to understand. We're oversimplifying this, but our classes that are free, whether you are an individual, whether you are part of a church organization,
a civic organization,
no one is teaching you how to go about canceling interest. And we're oversimplifying it. But once you go through one of our free classes, what we're going to do now is show you how to use the exact same tools the banks use to make money, how you can use those same tools to save money. That's right. By using technology. Now, many of you our phones have been ringing. People have been calling us. We even have some brand new clients that we've had come on board and decided in the beginning of January that I am now going to make the necessary steps to go about eliminating my debt.
Hi, new clients.
Okay. So, and there's some of you that we've spoken to that you're still sitting on the fence. Meanwhile, you're still paying way more in interest than the bank deserves to receive.
That's right.
So the next video that we'll tackle on, we'll determine whether we'll deal with church debt, dealing with church loans, and how churches, what type of churches banks love the most. That's but it's very true. If your church, for example, is storing those tithes for 3 or 4 weeks before they send them off to their proper entity, then the banks really love you. And what we're going to do is show you how you can beat the banks beat them at their own game. Okay?
Well, that's another video. Well, right now, what I want you to do is, if you're interested in learning more about student loans, just write us. You can go to futurefamilyfinance.com, or you can go to Jason at Future Family Finance, or give us a call at 256-258-9393. Future Family Finance, passing wealth, not debt,
to the next generation.
That's it.
All right, guys, thank you all again. We will see you on the next video. Apologize for not being back with you. Many of you know that we've been out of the country for the last couple of weeks, and we are happy to be back live and direct to you once again. We'll talk with you all soon.
Bye.
Bye now.